What's going on, everybody? Welcome to Beyond the Deal, the real cost of real estate, hosted by me, Jermaine. This podcast is about real stories that take place behind the scenes when it has to do with real estate. You'll be hearing from professionals, investors, and everyday people that are trying to purchase a piece of property. These are going to be actual stories coming from actual people. No fabricated stuff, just the real deal. So once again, welcome to Beyond the Deal, the real cost of real estate. All right, everybody, what's going on? What's going on? Right now, you've reached Behind the Deal podcast, the real cost of real estate. And right now, we have my boy on here. I got to give him a shout out, got to give him his flowers. Myles Days, aka Handsome Hustler, aka the Honest Investor, aka Mr. Passive Income.
Absolutely.
Yes. So it's like you're a financial educator. You were able to build an impressive investment portfolio stretching from Ontario, Alberta, Michigan. And also what helped you build this is your background in door-to-door sales, the retail space, and also business development. So that's what helped you build a solid foundation of what you sit on today.
Absolutely.
Got you. All right. Did I miss anything? Because let me know. Because you gotta put your stuff in, man.
No problem, man. No, you didn't miss much. I call myself a serial entrepreneur. Constantly trying to invest and put my money to work. Like you said, I'm the Mr. Passive Income. So I'm always trying to find deals that will allow me to kind of put the money to work. I learned during COVID that your money works harder than you ever can, and money never sleeps. So since then, I've just been trying different avenues to kind of build that bank, build income through putting up money.
Got you. So it's one of those things like, how were you able to be this entrepreneur? Because some people don't realize how difficult it can be to do what you are doing, or even just to get started. Like, where did your passion come from?
My dad, for sure. He pretty much left the workplace or workspace maybe when I was 7 or 8 years old. And just seeing him, he moved to Vancouver. He built a garbage truck company called Junk R Us. And he literally door-to-door knocking on businesses to get contracts to do garbage disposal. Seeing him build that from the ground up. Now he does food distribution, working with companies like Freshco and grocery stores across the country. So just seeing his ability to do it always made me interested in business. And then I call myself a hustler because from infrastructure perspective, I can definitely use some work. So like I tell people, I'm not like your average businessman, but I'll do the work and take the steps to kind of figure things out. Whereas like I feel like a real businessman has like the proper structure from day one. They know their targets and things of that nature. Whereas I just kind of learn as I go and try to learn from people that have done it before me and just kind of tackle things.
Okay. So it's with you doing that, I guess your superpower, you can say, is you're able to go into something not knowing how to do it.
Yes, I'm trying to change that a little bit. Since partnering with a friend of mine that I buy in the U.S. with, I found the importance of running your numbers and understanding a little bit more before jumping in. So now I don't go in as blind, but definitely as soon as something makes sense, I'm willing to take the risk and try to make it happen.
Got you. So when you first started off on this real estate journey, and building your portfolio to what it is today, what are some of the, I guess you could say, obstacles or hurdles that you came across due to the fact that you kind of just say, you want to know what, you see the end goal, but not necessarily the first, second, or third step. So
Absolutely.
how did you create this portfolio? Like, what were some of the obstacles?
Yeah, so like the biggest obstacle, I think, jumping into the real estate game, I was under the impression just being able to buy, like secure your 20% down or whatever deposit structure that you have in place, just being able to get there and closing, I thought was the finish line that made you an investor, that made you successful. But after closing on my first investment property, I realized that's not really the case. That's just really getting into the game, right? That's just a jump ball. So again, I would reiterate, like, really the importance of running your numbers, like even more important than almost anything else. I tell people the money is made on the buy, right? So when you're getting into real estate, whether you're flipping or you're buying for the long-term hold, before you close on this deal, you want to know what all your expenses are and how much income it could actually generate before you pull the trigger.
Okay, so it's like, so on your first project, walk us through your very first project that you just said that kind of got you the entry to the game. So once you signed that document, what were some things that made you say, "Holy shit! Like, I can't believe I'm going through this right now. Like, I didn't envision this." Like,
Yeah,
what are some of those numbers?
some well, more than even the numbers. Just so I was under the impression, like I bought during the COVID hype, or at least started investing during the COVID hype. So I bought my first condo thinking that I'm going to make so much money on assignment that I wouldn't even have to close on this unit. Prices are only going up. I tried to hedge my bet a little bit by partnering with 3 other individuals on this
Mm-hmm.
one, just to kind of make sure that even in a worst case scenario, the 4 of us would be able to figure it out, type of thing.
Yeah.
But then we got like this huge uptick in interest rates, and projects started to kind of get beat up a little bit. So this particular builder wasn't able to complete the project, so they went into receivership, and then going through that process was a whole challenge in itself as well. We essentially got our deposit back after a couple of years, but it was a hassle. Some investors, other buyers, didn't get their deposit back because they didn't sign their deposit in trust. So it was a great learning experience. I didn't know that this can kind of happen. So it was a huge learning experience, huge eye opener as well, because you also get to see how your partners react to turmoil and when things don't go as planned. So it also forced me to kind of not necessarily second guess people, but maybe from the beginning get a little bit more in writing, setting everybody's expectations, because life happens, right? We can have a common goal in the beginning, but things may change. And if you don't have anything in writing to kind of keep us on the right path, or at least on the same path, things can get kind of crazy. So these are all things that I've learned by just taking these risks, right?
So like with that project, you learn so many things that you just reiterated, in the sense of you learned about yourself, and then after you learned about essentially having the proper team around you.
Mm-hmm.
Because sometimes when shit hits the fan, people don't know how to react. Because
Yeah.
it's tough, because you don't find out, like, when everything's good. But it's like, when you go through a certain situation, you want to make sure you won't be able to tell who those individuals are until things go wrong.
Exactly, exactly. And it doesn't even make them bad people or anything like that. It's just sometimes circumstances change, certain pressures force people to behave a certain way or make certain decisions that might not be the betterment for the team, but it's the best decision for their family or their household, right? So it's just, again, having things in writing from the jump
Yeah.
just kind of mitigates that stuff. And these are things that I didn't consider. Like you said, I've worked retail, I've worked for a Fortune 500 company, I've had people work under me, but in those environments, the company, pretty much any contract and stuff, they do for you. As an entrepreneur, you have to set all these guardrails and things all by yourself, and I wasn't fully prepared or ready for it at that time.
Yeah, because every one thing I know about being an entrepreneur is that you can't always foresee what's about to take place. So even when you're drawing up your contracts, you don't even know. You might be able to put the simple things in there, the stuff that you kind of like, okay, you know what? Everybody gets this type of percentage, the money that you put in, whatever it is, that's what you get back. But as you said, when COVID hit, there was a bunch of situations that took place that nobody was prepared for.
Exactly, exactly. Yeah, it was crazy.
So after that project, what was your next move to kind of propel you even more?
So the next move, again, so COVID hit. I literally, in maybe a 3 year span, I bought maybe 5 condos.
Okay.
And I wouldn't recommend this because my biggest mistake is buying all the same product, and like condo fees are an expense that will never go away. So I had bought a condo in North York, at Keelsdale, Keelan Shepherd, or Keelan, sorry, Wilson area. No, south of that. Keelan Lawrence, between Keelan Lawrence and Keelan Eglinton.
Keelan Lawrence and Keelan Eglinton.
Yeah, there used to be a hospital there years ago. They tore it down.
You're talking about Keelan Wilson behind the gas station?
So, see the one at Keelan Wilson?
Yes.
That new hospital replaced the one that was at Keel and south of Lawrence. This is like years ago, like early 2000s. They shut it down or something like that.
Got you. Okay.
So there's a condo project in there. I bought phase 2 thinking I'm in early. We knew phase 3 was coming shortly after, so we bought, and after buying, within like 6 months, the price had gone up over $120,000. We thought we were
laughing. You're laughing. It's like, this is gravy.
Exactly. And then again, like COVID, once interest rates started going up, prices started coming down, right? Demand started to slow down.
Yeah.
And then by time it was time to close, luckily, I mean, prices fell back down, but it fell relatively close to our purchase price, so we didn't have to come up with anything additional to close. We weren't under any shortfall or anything. So that one worked out, but that's a cash flow negative unit right now. We have a tenant in there that's paying on time and everything is okay, but we're still putting a few $100 a month on top of that every month. The only reason why I don't let that stuff really stress me or bother me is because real estate is a long-term game, right? If you go in thinking quick flips, those are very possible, but they tend to work out better when you have a long-term plan and you get everything done and you sell early or things of that nature. So we're just thinking of it. We've been in the unit for 2 years. We have like another 8-year window, and we'll just kind of see how it goes from there. At the very least, even though we're paying a little bit on top every month, we do have the mortgage pay down, and we'll see in 3 years when we go up for renewal, we'll see if we have any equity and if we can kind of restructure or refinance how we have things set up so that we can be cash flow positive. But until then, we're just kind of learning as we go, like I said, with anything else. And I don't mind being a landlord. It teaches me a lot as well. Patience, forces you to have good communication, and it keeps you in tap with the market, right? When rents are fluctuating, okay, well, if rents are falling, housing prices might continue to fall, or if rent raising and demand is starting to pick up, sale prices might start to pick up as well. So it kind of keeps me tapped into the market, which is kind of cool.
Yeah, because I did notice, like, not recently, I would say probably over like the last 12 months, that's when the rent has kind of went down a little bit, like $200-$300 in the sense.
Yep. So my best unit, I would say, is my Calgary. In Canada, my best unit is in Calgary, a 2-bedroom condo in the Northeast, like 5 minutes from the airport, 10 minutes from downtown, 15 minutes from downtown. And that one is cash flow positive, but I went from the cheapest 2-bedroom in the area to the most expensive 2-bedroom in the area in about 12 to 15 months. And then I had to do a price reduction. So I'm still cash flow positive, but like just barely.
Okay.
Yeah.
So what made you decide, like, in terms of everybody's always talk about, like, Toronto is always the best place for real estate, invest in Toronto. What made you decide to go the opposite direction and invest outside of Toronto?
Because I was just learning about the importance of the numbers. It was just what I saw as an up-and-coming market. It was just a little before all the hype came to Calgary. But I saw, like, I got my condo for $300,000 for a 2-bedroom, 1,200 square foot, literally right on an LRT line, can get you downtown off the transit. You don't need a car and stuff. Like, a great location. So it was more so just the entry price. Instead of paying $500,000 for a 1-bedroom in Toronto, you can get a 2-bedroom for $300,000. And like I said, I got in a little early, so that one I was able to take equity out of after a year to use to invest in other endeavors as well. So that one has worked out really well. There, like I said, also there has been pullback in prices and rents and things of that nature, but because I bought that one properly, we're still surviving.
That's amazing. Yeah, because like I always hear stories about individuals that say they want to invest outside Toronto, but they they're not too sure where to go, how to do it, or even where to start. But that's amazing that you're able to accomplish that.
Yeah, I would recommend it. especially for rookie investors, start out. It doesn't have to leave. You don't have to leave Ontario, but I would start outside of the GTA. Even go up north, like to a minor town where they're there for work. They mine. They're not buying no houses. They're gonna rent,
Yeah.
6 to 8 months out of the year, et cetera, et cetera. So I would look into that stuff. I partnered with a bunch of people uh, last January, we bought a multifamily in Cornwall, just outside of Quebec,
Yeah.
and we bought a fourplex that we're going to convert into a sixplex. While we're waiting for permits to put 2 units in the basement, my
Hmm.
partners, very smart individuals, they put a laundry mart in the basement while we wait for paint for the permits. So
Yeah.
the tenants pay for laundry. We're making cash flow that way, and the units are cash flow positive. That one we bought for 440, and a year later it reappraised at 640, 650.
Oh,
So things are
that's really good. So essentially, after you kind of did your down payment, your land transfer tax, and everything, the next move might not cost anything out of your own pocket, just on a
exactly
refinance.
on a refinance. Exactly, we might be able to get some money out of that as well. So, like I said, these are things that I'm learning later on in the game. That again, the money is really made on the buy. Understanding your
Hmm.
numbers, understanding what forced appreciation you might be able to provide to take some money out during our refinance and things of that nature, right? Like the biggest thing with real estate is that it gives you the opportunity to leverage that most other assets don't, and I think it's a tool that we all need to learn, especially in the Black community.
Hmm.
If a couple of people just pull some money together, it doesn't have to be the nicest house. It doesn't have to be the biggest house. As long as the numbers make sense, your balance sheet, right? Your assets are covering your liability, and the rest is owner's equity, and that's what we're aiming for, right? To build that owner's equity.
No, most definitely, most definitely. So let's just say if you had to start today, like start from scratch right now, what would be your approach to getting that property? Like, what would you do if you had to start over all over again?
First things first, I would look into the U.S. market, even as a Canadian, just because the burden of entry is so much lower. You
Hmm.
can buy in the Midwest, like Chicago, Detroit, Indiana, Cleveland. You can find single family units for under $100,000. And even as a Canadian non US resident, you can use
Hmm.
what's called debt service. What is it? DSCR loan. It's based on the asset instead of your financials. So as long as you can prove that the rents generated from the asset will cover the bills, you can get a mortgage based on the house's ability to pay for itself. So you don't need a great credit score and things of that nature. So it's
Hmm.
just a lot easier to enter. And
Hmm.
if any of your viewers have questions, I mean, you guys can hit me at any time. I can make connections and share.
For
But I would
sure.
I would recommend looking into investing in the U.S. first, build a little bit of bank, and then if you are set on buying in the GTA, then you take your profits from the U.S. and
Hmm.
buy in Canada.
So when you first entered the U.S. market, like even with the whole foolishness going on right now, the back and forth, the tariff wars, and just war in general,
Mm-hmm.
how were you able to find that opportunity and also make it beneficial for you, knowing that you don't live over there?
Yeah, so my partner, he's like a super diligent individual. So what we started
Hmm.
doing before even driving over there or anything like that, we just called. First, we started with agents, real estate agents, and brokers that do like wholesaling and things of that nature down there. Then, in speaking to them, we got the contacts of some of their
Yeah.
and we spoke to actual owners who are living in Canada and own real estate in the States and just asked them about their process, how easy or difficult it was. And then once we got that down pat, we connected with the realtor in Detroit and
Yeah.
we built a little bit of a commitment with him where we pay him to walk through houses for us and take videos, give us his thoughts. We joined Facebook groups and connected with contractors in Detroit. We
Hmm.
made sure before hiring any contractor, we made sure they came with multiple references of people that they've used or done services for in the past. We interview those people. So a lot of due diligence on the back end before jumping in. It does slow down the process, but I'm learning heavily that building the right foundation, even if it takes a little longer than you had planned, sets you up for success in the long run. And then afterwards, things kind of feel easy, like it's automated almost.
Got you.
We,
So with your property that you own in Michigan, how do you find in terms of the rent and the mortgage? I like the way the states operates in the sense that whatever, if the rent covers the bill, you will get the money to buy this asset.
yeah,
Over here, they look at your rent as they might only take 50% of it, or they might only take 80% of it, but that's what you're actually getting. Like your rent is what you're actually getting. But once again, I was even on my previous episode, I was telling the broker I was talking to that the banks don't look at your whole income that you're getting. Like they look at your net in the sense. But that's not actually what you take home. But now when you're looking at your rent is actually what you get every single month, but they don't
exactly.
want to consider that. Like some banks might, but some banks don't. But they don't want to consider your rent as
Yeah,
actually what you're getting.
especially Ontario. I think we're a little over regulated because to me personally, it doesn't make sense to qualify for an investment property based on your personal financials. Because, like you said, it's the rent that's going to be paying it, right? And then we're like, especially in Ontario, we're like, we get the short end of the stick as a homeowner because if you have a tenant in there and they don't pay, they have more protection and rights than you do. Like your mortgage provider doesn't care that they're not paying; they still want your money, but the landlord tenant board is still protecting the tenant. You can't get them out as fast as you would like to get someone else in there, right? So it's like it's really, really difficult. Not to say it's impossible. Plenty of people are making a lot of money with real estate in Ontario. I just think it's not for rookies right now. It's just I would recommend at least Southern Ontario, I should say, not all of Ontario, because there are still lots
Mm-hmm.
of places. But it is a little bit of a tricky game, and there isn't a lot of people or communities teaching people how to do it before they get in. A lot of the people, at least in my experience, is the people that are trying to teach you are the same people that are trying to sell to you. So they have
Yes.
an incentive, right? They're only teaching you a portion. And not to say like they're doing anything wrong, but it doesn't give you the full picture 9 times out of 10.
Got you. So I'm glad that you mentioned something about teaching because I know you've been doing your thing and you actually have classes about this, like teaching with financial literacy. Can you explain some of that as well? Because
Yes,
I think that's very important.
absolutely. So I started a company, Handsome Investments. We have a school as well. There's an app, SKOOL. You can find us
Mm-hmm.
on there as Handsome Investments. But just teaching people, like you said, about financial literacy and like more than just the buzzword of financial literacy. I strongly believe that since COVID, we've been hearing this financial literacy bit a lot because the financial system as we know it is slowly changing. We're moving to
Mm-hmm.
the blockchain, we're utilizing AI more and things of that nature. So they're giving us more information now on the old way of things and totally ignoring or not showing us crypto and the power of blockchain. No matter what cryptocurrency your bias is, like forget the meme coins and riding it to the moon and stuff. There are actual cryptocurrencies with real world use cases that are building the infrastructure for the next financial system. So I
Yeah.
try to touch on that. I educate people on the importance of holding physical precious metals, and then I react to just regular news information, and I share my real estate journey as well on there.
Yeah. Because one thing I did notice as well, since you said like precious metals and stuff like that, when everything seems to be going to shits, gold always seems to be doing well. Because that's the
Exactly.
first thing that was ever traded for money. Got you.
So it wasn't the first, but it's
Mm-hmm.
the best. They call it God's money because gold can't really be counterfeited, can't be
Yeah.
duplicated. Actually, our paper money that we use today started as a representation of gold, but then in the 70s they stopped backing our money by gold. But I recommend it because, like you said, it's considered a safe haven asset. So
Yes.
when things hit the fan, people tend to invest in that, knowing that it's a lot more safe investment. Also, because we operate on a fiat system, the governments essentially print money out of thin air. So when there's more money in circulation, certain assets that you can't print out of thin air, like real estate, gold, crypto, they tend to go up in value because there's more dollars than there are of the asset, type of
Yes.
deal. Yeah.
So with financial literacy, knowing that like when we grew up, right? Like you never heard of like financial literacy. Why you might not even be able to answer this question. It might be just like even like opinion based,
Yeah, no
which
problem.
is cool. But it's why was it or why is it that schools growing up don't teach us this?
I personally believe that because school is to create employees, right? If you really take it in, hospitals, schools, jails, and factories run with the same principles, right? You ask when you can go to the washroom, you have to be able to follow instructions, you're not allowed to work with a team, you have to be independent. All these things that help you be a great employee but doesn't teach you how to work for yourself. And working for yourself is not for everyone, but it doesn't give you that option. It really
Yeah.
channels you into finding a career path. So financial literacy for an employee is not as important as it is for the owner. And we're in a society where they're just trying to raise employees, in my opinion, right? Like, if we look back, it was like the Henry Fords of the world that really started funding universities and organized school systems, and they just needed more and more people to work at Ford, right? So
Yeah.
it's a system that a lot of us don't really know. I didn't know that we were in this quote unquote matrix until I was in my 30s, and by the time you realize you're already 30 plus years in the matrix, so it's really hard to kind of break out of, or you know what I mean. So I think the program is put in place to keep us at bay, and the onus is on us to recognize it and take little steps, even if it just starts with a side hustle, just to get in the rhythm and understanding of a balance sheet. Because I think I'm slowly learning that's the most important thing in this financial system is being able to manage and operate a balance sheet.
The best way to probably look at that, even for individuals to even try to figure it out, I would say for them to operate their own life as the balance sheet.
Exactly.
Like whatever, when you get your paycheck, look at it, divvy it up, whatever you got, 10% to savings, 10% to
Hmm.
entertainment, your bills,
Hmm.
and just figure it out like that because that's with that within itself can teach people the actual real world. Like
Honestly,
sometimes when you think people say, "Oh yeah, I'm making $10 an hour, whatever the case is," and I'm getting all this money. No, no, no. The government comes for the regular people first,
yep,
right? Like,
yep.
they just like you looking at your deduction, you're like, you taking all of this right now?
Honestly. So
So,
that's exactly it. The name always escapes me, but one of the early U.S. presidents, that's what he did. Like from he was like 7 years old. If his
yeah,
mom gave him allowance, he recorded it on a ledger, right? Your debit and credit, and essentially you'll realize that that's all paper money is. It's a representation of the bank's balance sheet, right? I'm giving you this $20 bill where you can exchange it at a bank for value. That's all it really is. But they kind of distract us and teach us all this stuff that I believe we don't necessarily need because if we don't know that if we don't have the tools that we need, we're so much more dependent on the system, right?
yeah. And as you said, it's like with Canadian currency or just the money currency in the sense, that's literally printed out of thin air. We go to get our mortgage, all of a sudden the banks call the Bank of Canada, say, hey, we need a loan. How much is this person's credit score? A, B, and C. What's the property going to be used for? Okay, we'll send over the money to you. Boom.
Exactly.
Money just being printed.
Printed. And then so how that money, like the mortgage, how the money is actually created is when we pay it down plus interest, right? So the bank makes a commission on the interest, and the money is really realized once we make the payment. So on the bank's books, on their ledger, our mortgage is we're on the credit side, right? Like we owe them. So it's
Mm-hmm.
not, they don't realize it until we pay it back. So definitely things like I've been saying lately, I regret not paying more attention to grade 10 and 11 accounting, because low key is like the most important course that they can teach us, because if you can balance your personal balance sheet, it will
Yep.
make things a lot easier from a business perspective, and like you're unstoppable.
Yep. Yep. Most definitely. I actually did all right in accounting. I did all right in that aspect. And there's another thing I want to switch to.
Yep.
So I'm not too sure if you remember, because I went into the archives for this one.
Uh,
So in 2023, the Toronto Guardian wrote an article on you called "The Chase Group Inc." And there's a quote here that says that you said, "This is created to remind people that they can achieve whatever goal they set out for themselves as long as they chase it." So with that being said, could you please tell us what this another facet of your empire is about?
Yes, so my company as a whole is the Chase Group Inc. Under it, I had a rental car company, I have a clothing company, I have the real estate, both
Mm-hmm.
long term rentals and short term rentals. And literally, that's the message behind it. We even named my son after the business. My son's name is Chase, because we
Nice.
just want to remind people that you can do whatever you put your mind to. Rome wasn't built in a day, so I try to remind people that set long term goals. You might
Mm-hmm.
set a goal for a year, and by the 11th month mark, things are not really working out the way you had hoped, and you start adding pressure and stress to yourself. But if you set a 5 year goal, and you see by year two, three, you're ahead of schedule, you're going to have so much more confidence, and you probably hit that target well before the time that you allotted for it, right? And it
Yes.
doesn't matter how big or small the goal is. I think with the right plan and the right mindset, we as humans, we're created in God's image and likeness. We can literally do anything that we put our mind to. I just think our biggest issue is that we want things a lot faster than we should. Insta, everything, Instagram, Instacart.
Yeah.
We just want it now, and we think because we see people online showcasing certain things that might not even be their reality, we're trying to keep up with the Joneses, and we're putting a lot more pressure on ourselves than we should.
Like as you just said, like I think instant gratification is sometimes our biggest struggle.
Mm-hmm.
Because when you can have a delayed gratification, and as you said, set the goal a little bit longer, set the goal 2 5 or 3 to 5 years from now, that's when you'll see the added bonus. And if things kind of speed up, that's when you're able to figure it out. But sometimes the instant gratification, like let's just say like right now you're doing your thing, but nobody knows 10 years ago what you were doing.
It's a
They just
fact.
think like you just don't wake up out of your bed and get all the things that you have accomplished. But some
Exactly.
people might think it like that. They'd be like, "Oh, sure, I want to do what this guy's doing," and not realize all the sacrifice, all the dedication, all the probably sleepless nights you have to put through to get to where you are.
Absolutely. Absolutely. Right. So that's the message. Like my logo is a money bag with a C on it,
Yeah.
but I want the bag to really represent your goals, not necessarily money, because not everybody's driven by money, but
Mm-hmm.
almost everybody has at least some sort of goals and aspirations. So I just want that to be the focus, and I just want to remind people and hopefully be an example as well that you can definitely. It's not going to be easy. Nothing comes easy. They say like choose your heart and all that stuff. It's definitely some things come easier than others. Some things are a lot more challenging. But there's the only thing that can stop you is you.
Got you. Got you. Well, thank you so much for being on this podcast, everybody. Miles Day, as I said, aka Handsome Investor, aka the Hustler, aka the Honest Investor, aka Mr. Passive Income.
Thank
Thank you
you.
for being on this podcast and bringing to light and showcasing or telling everybody your story. I appreciate it. Thank you.
Thank you, man. Thank you for having me. I'll come back anytime you need me, man. I love conversations like this. I think what you're doing is important. especially for our age group, because I know people might be feeling a little discouraged right now with how things are going in the economy. But look to people like Jermaine, stay positive, and definitely, like I said, you can accomplish anything.
Thank you, thank you. All right, guys. Until next time.
Take
Later.
care.
There you have it, another episode of Beyond the Deal, the real cost of real estate. You can check us out on YouTube, Spotify, and Apple Music. And do me a favor, y'all. If anything resonated with you, if you learned something, if you enjoyed the podcast, like, share, and subscribe. Happy investing and happy property hunting.